Okay, let's dive in. Today, we're really digging into Verizon's Q2 2025 financials. We've sifted through the analysis, the reports, and our goal here is really to get you past the headlines. Cut through the corporate speak. We want to show you what's really driving these numbers, maybe some surprising things, and just get you fully up to speed, fast, and, well, what a quarter they had. Verizon actually surpassed estimates pretty handily, both on adjusted earnings and on total revenue.
Yeah, they really did.
Total operating revenues, they climbed, 5.2% up to $34.5 billion. That beat the consensus of around $33.6 billion. And adjusted earnings per share came in at $1.22. That was 4 cents better than expected.
And what's fascinating there isn't just that they beat the numbers. It suggests some real fundamental strength, especially in that core wireless service business.
Right.
They pulled in $20.9 billion just from service revenues. That's industry leading. And it's up 2.2% compared to last year. That's the money from your actual plan month to month. It shows their main business is, well, pretty healthy. Those network investments seem to be working.
And something else that really jumped out, at least to me, was the broadband growth, specifically fixed wireless access, FWA.
Oh, yeah. Big time.
It feels like more than just adding customers. It's like a major strategic push, right?
Definitely.
They added almost 278,000 FWA customers just in Q2, which pushes their total base over 5.1 million now.
Mm-hmm.
And get this. They're aiming for 8 to 9 million FWA subscribers by 2028.
That's ambitious.
It's a huge bet on, a different way of delivering home internet.
Yeah.
Especially maybe in places without great fiber options yet.
And if you connect that to the bigger picture, that FWA growth really highlights this strategic pivot they're making. But, you also see a bit of a mixed picture in the, let's say, traditional consumer segment.
How so?
Well, they did add 28,000 Fios internet customers, which is decent, maybe driven by more video streaming, needing good speeds.
Okay.
But at the same time, they lost 62,000 Fios video customers.
The cord-cutting effect.
Exactly. It's that industry shift we've been seeing for ages, right? Away from the traditional TV bundle towards streaming. So it raises that question, how do you adapt? Where does the investment make sense now? It's tricky.
Yeah, that Fios video number is definitely a sign of the times. But looking at the whole consumer segment, performance was actually pretty strong overall.
It was, yeah.
Total revenues were up almost 7% year over year. $26.65 billion, beating estimates again.
Mm-hmm.
And a lot of that was driven by wireless equipment revenue, like phones and stuff. That was up nearly 30%.
Wow. Yeah, that's a big jump.
And they seem to be keeping customers, too. Churn rates look pretty healthy.
Right.
Wireless retail postpaid churn was only 1.12%. And even lower for phones specifically, just 0.9%.
That's pretty good retention in, a very competitive market.
Okay, so consumer side looking pretty solid, despite the video losses. But the business segment, that was a slightly different story, wasn't it? A bit softer.
A little bit, yeah. Revenue dipped slightly, down 0.3% to about $7.3 billion, just a hair under estimates.
What was behind that dip?
It seems like mostly lower revenues from wholesale, big enterprise customers, and the public sector, partially offset by some growth in mid-market business, but yeah.
So the sort of challenging economy, making bigger organizations maybe hold back a bit on spending?
That seems to be the main factor, those macroeconomic headwinds we hear about.
Gotcha.
But even with that revenue dip, they did still add wireless customers on the business side. 65,000 postpaid net adds, including 42,000 phone adds.
Okay.
And importantly, business contributed a lot to that FWA growth, too. 114,000 fixed wireless net adds came from the business segment.
Interesting. So FWA isn't just a consumer play for them.
Not at all. Seems like a key part of their business offering, too.
So despite the business revenue dip, and even with overall expenses ticking up a bit, profitability actually improved.
Yeah, that's another kind of interesting piece here. Operating income was up 4.5%, and that adjusted EBITDA number, which is a key measure of operational health.
Right. Earnings before interest, taxes, depreciation, amortization.
Exactly. That increased to $12.8 billion from $12.3 billion last year.
So they're running more efficiently somehow.
It seems so. They likely benefited from maybe fewer people upgrading phones, keeping costs down there, even while total operating expenses did rise about 5%, suggests pretty disciplined cost management alongside that growth focus.
Okay, so looking forward then. Cash flow was $5.17 billion for the quarter. A bit down from last year, but still significant. Debt's around $124 billion. But the really key thing, the thing that signals their confidence, they raised their guidance for 2025.
Yeah, they didn't just stick with it, they bumped it up.
They now expect wireless service revenue to grow between 2 and 2.8%. And adjusted EBITDA growth, they raised the bottom end, now expecting 2.5% to 3.5% growth. That feels like a pretty strong signal, doesn't it, given some of those headwinds we mentioned?
It really does. Raising guidance, especially on EBITDA, suggests management feels, pretty good about their cost controls and the momentum they have.
Particularly with FWA.
I think FWA is a huge part of that confidence, yeah. Plus the stability in the core wireless services, the hurdles, ongoing competition, definitely, and seeing if that enterprise market recovers. But clearly, they believe their strategy is working well enough to hit those higher targets.
So, okay, we've really tried to peel back the layers here on this Verizon report to show you the strategy shifts, maybe some surprising bits, and what it all means for a giant company like this, and maybe even how it connects back to, your own digital life. Hopefully you're feeling well informed. All right, so let's try and synthesize this. We've gone through a lot of numbers from Verizon's Q2. What are the biggest takeaways? What really stands out now that we've done this deep dive?
I think zooming out, the main story is it was a fundamentally strong quarter for them, driven by, number one, that robust wireless service revenue, the core is solid, and number two, maybe even more importantly for the future, that really impressive momentum in fixed wireless access.
Yeah, FWA seems critical.
It's clearly a cornerstone of where they're headed strategically, and even though they face some of those headwinds in the business segment, the macro stuff, the overall picture is one of resilience and pretty clear strategic direction.
And what really gets interesting, I think, is not just that they beat the estimates, but seeing that confidence reflected in the updated 2025 guidance, raising that EBITDA growth forecast.
Right.
It really suggests they feel they're successfully navigating these big shifts in how people use technology. Even with things like the Fios video decline, they're leaning hard into these new growth areas like FWA. It's a rapid pivot.
And that does raise an important question, maybe for you, the listener. As companies like Verizon go all in on technologies like FWA, how might that reshape the whole broadband landscape? The competition, the actual options available to you, especially thinking about that big 2028 FWA target they have.
Will it mean more choice? Different kinds of choices? Yeah, that's a good question. And that's kind of the point of doing these deep dives, isn't it? It's not just about the corporate earnings report itself, which could be, let's be honest, a bit dry.
Sometimes, yeah.
It's about understanding the forces that are actually shaping, our digital world, our infrastructure. And there's sometimes surprising ways these companies have to adapt so quickly. So hopefully you've gotten a real shortcut to being genuinely informed on what Verizon's up to. And maybe one final thought to leave you with. With Verizon betting so heavily now on fixed wireless, what might be the next big access technology? The next thing that could fundamentally change how we all connect. And how might companies already be laying the groundwork for that? Maybe even hidden in today's financial reports. Something to think about.